September 15, 2008, the day Lehman Brothers collapsed, sending shockwaves through the global economy. But how did one of Wall Street's biggest banks go from $600 billion in assets to bankruptcy overnight? And why did its failure trigger the worst financial crisis since the Great Depression? In this video, we break down the rise, fall, and lasting impact of Lehman Brothers. Let's dive in. Segment 1. The Rise of Lehman Brothers. Lehman Brothers started in 1850 as a small cotton trading business, eventually growing into one of the biggest investment banks in the world. By the early 2000s, it was the fourth largest investment bank in the U.S. It managed over $600 billion in assets. It was a major player in mortgage-backed securities and risky loans. Lehman was making huge profits, but behind the scenes, trouble was brewing. Segment 2. The housing bubble and Lehman's risky bets. In the early 2000s, banks were handing out subprime mortgages, loans given to people who couldn't afford them. Lehman Brothers heavily invested in these risky mortgages, packaging them into mortgage-backed securities, MBS, and selling them to investors. Why was this risky? These loans depended on home prices rising forever. Lehman borrowed massive amounts of money, high leverage. The system relied on people paying their mortgages, but what happens if they stop? Segment 3. The collapse begins. 2007, housing market crash. In 2007, the housing bubble burst. Homeowners defaulted on their mortgages, and the value of mortgage-backed securities collapsed. For Lehman Brothers, this was a disaster. Their investments lost billions overnight. They were stuck with toxic assets no one wanted to buy. Investors panicked and pulled their money out. By mid-2008, Lehman was desperate, but no one wanted to save them. Segment 4. September 2008. The final days. In September 2008, Lehman's stock plummeted as investors lost confidence. CEO Richard Fuld tried to secure a bailout, but the U.S. government refused to step in. Potential buyers, Barclays, Bank of America, walked away. Lehman ran out of cash. Bankruptcy was the only option. On September 15, 2008, Lehman Brothers declared bankruptcy, the largest in U.S. history. Segment 5. Global Financial Crisis Unleashed. Lehman's fall triggered chaos in the EA. Global economy. Stock markets crashed. $10 trillion in wealth disappeared. Banks stopped lending. The financial system froze. Unemployment skyrocketed. Millions lost their jobs and homes. The crisis forced governments to bail out major banks like AIG, Citigroup, and Goldman Sachs. But Lehman, it was left to fail. Segment 6. Could Lehman have been saved? Many argue that if the U.S. government had bailed out Lehman, the crisis might have been smaller. Others believe Lehman's reckless risk-taking made its fall inevitable. What do you think? Should Lehman Brothers have been saved? Segment 7. The legacy of Lehman's collapse. The fall of Lehman Brothers changed finance forever. Stricter regulations, governments passed laws to prevent another collapse. Too big to fail doctrine, banks deemed too big. To fail? Now get bailouts. Wall Street's risk-taking continues, but are we safer today? 15 years later, have we really learned our lesson? So, what do you think? Was Lehman's collapse necessary to fix the system, or should the government have stepped in? Let's discuss in the comments. And if you found this video insightful, don't forget to like, subscribe, and hit the bell for more deep dives into financial history. See you in the next video.